So thank you for that introduction. My name is Bongani Makoni, and today we're going to talk about finance in the marketplace, unlocking finance insights for growth. So this workshop is really designed to empower entrepreneurs to improve your financial management skills. As business owners, we do a lot within our businesses, whether we're present 100% or not, we do a lot. And one of the key things for the success of a business, amongst other things, is financial management. And to have those skills is really important because it makes sure that you're managing your business effectively. So I'm just going to give you some practical techniques, and hopefully those techniques will assist you. So this is an overview. So we're just going to talk about my journey, the importance of financial management, record keeping essentials, understanding cost pricing, and cash flow management strategies. Like Tosin mentioned, this is over 2 sessions, so we will be talking about other things next week. And today, these are the specific topics I'm going to be talking about. So here is my journey. I am a Christian and I'm a professional with training and qualifications from the UK, and I've had extensive experience as an entrepreneur. I founded and co-founded several businesses, and after moving back from the UK, I operated in Zimbabwe for 14 years until this year in August 2024, and I have since relocated to Canada. During this time, I took part in various programs. Either they were business courses, they were workshops, they were mentorship programs. I would do what I could to improve and sharpen my career. And I believe that those things that I took part in on that journey really have shaped my career and where I've gotten to. Amongst running businesses, I've also worked at a corporate level. And during that time, I also got the experience of how businesses run at a certain level. And some of those things that I would learn, that I would do at work, I would try as hard as I could to apply to the businesses or the spaces where I was operating as an entrepreneur. So having lived on 3 different continents to date, I've really learned a lot. And my experience and my mentorship skills have really been rewarding for me. And in this picture, I just thought I'd highlight a Business Women's Award that I won in 2016 in Zimbabwe. And that was awarded to me for Businesswoman of the Year when I was running a microfinance. So a snapshot about my business journey. I'm currently based in Canada, like I've mentioned, and I have already registered a business. This is how excited I am about entrepreneurship and about making money for yourself. And I hope that this business will be trading by December this year. So I have a lot on my plate, but it is going well so far. So these are just some of the things that I've done in Zimbabwe. We had a photo booth. This was more for the entertainment industry, and it was one of the first few booths that had kind of come into the market, and we saw a gap in the market and just went for it. And I ran that for almost 8 months or 9 months. It's something that just happened at the end of last year. And we served both commercial and private customers. And I successfully sold this business for 3 times what I put in, even though I traded for less than a year. And then we did dehydrated fruits. Our business is called Raw Dried Fruit, or it was called Raw Dried Fruit. And we offered preservative and additive-free products. So whilst you have your dried fruits in the market, some of them are do have preservatives and additives like sodium and things like that to preserve them to last longer. We offered this product without the additives and without the preservatives. And we would source fruit from local vendors just to add value to those fruits or vegetables that they would ordinarily throw away if they never sold by the end of the day. So your bananas, your pineapples, your apples, all your fruits, most of your fruits we were able to dry, and then we were able to sell, including your green vegetables that you would eat with your staple meal. We were able to dry those as well. And just also empower someone else to be able to make that extra $2 a day by us taking something that they would probably have to throw away and have no use for.
Bongani, I'm so sorry to interrupt you. Could you start your screen share again? I think Victoria mistakenly took over after she restarted. She didn't hear that part where I said you should take over.
Okay. That's okay. Okay. Just give me a second. What screen was I on when it last?
It was 14, slide 14 specifically, when you were
Slide
talking about
14.
raw dried fruit. Yeah.
Okay, just give me a second.
While you're
Okay.
doing that, Samson is struggling with the audio. Is Samson able to hear? Because everybody else can hear, I think. Yes, thank you so much, Madam Amy. I think it's unique to just you. So maybe log out and try and come back on. Bongani, still with us?
Can you hear me?
Yes, I can hear you now.
Okay. I'm sorry, I'm not sure what happened there. So let's just try again.
Okay.
You said it was page
Slide
14.
14.
Yes, is this one? Is it this one?
Yes, it's just that one.
Okay. Okay, so here we go. So Dehydrated Fruit is then a business we sold when we moved, and again, it was a successful sale. The business really did well in the market. I've also been part of a microfinance, which was a registered microfinance with our Reserve Bank, and we were lending communities, farmers, small businesses, and individuals to get personal loans. And within that business, we grew over time. We had a really good loan book, and then we had an opportunity for a joint venture from an international investor. And at that point, I then left the business after there were some changes within our economy, which were not allowing us to pursue that route. And then more currently, and what I've been doing consistently for a while, is consulting, public speaking, and mentorship. So I do offer mentorship sessions, coaching sessions, where I can assist businesses to grow. I've been consulting within businesses that need to regularize, that would like to become compliant, and that is some of the work that I do up until now. So now we're just going to move into our topic straight away. The importance of financial management is what we will start with. So financial management is critical for entrepreneurs to make informed decisions, manage cash flow, and achieve profitability. Without effective financial management, it's difficult to grow your business sustainably and to achieve your goals. So one of the things that I've noticed, given the surveys that came through, is that people are in partnerships, people are in limited liability companies, and financial management is really crucial and important, particularly when you are in a partnership or you're with other directors, because it really provides you that accountability and that transparency when you're running your business. If you manage your finances well as a team, as directors, you're able to see how the business is growing. You're able to see what is happening in terms of the business's profits or losses, or just the activities. So managing your finances is really important as a business owner. So we're just going to start with basics, which is really the theme of this. We're looking at basics, but I know that some of us don't do this, and some of us struggle with this. If you're an accountant like me or a finance person like me, it's always easier to do because it's something that you probably do day to day if you're working for a corporate company. But sometimes if you're a marketer, if you're more of a salesperson, this is outside your comfort zone. So we tend to then shy away from doing these things, but these are really important. So some of the things we're going to discuss is record keeping. What is record keeping? Record keeping is the organized process of creating, maintaining, and storing documents related to business or personal activities. As much as we're talking about business today, I'd like to add that even on a personal basis, keep your records, manage your financial affairs, have a personal budget, look at your expenses. Are you spending too much? So these same principles are equally applicable to your personal life. It is essential for legal compliance. So if you're registered as a business with your tax authority, some of these records are necessary for things like VAT or sales tax, depending on which country you're in. And also, it creates operational efficiency as well. Whilst you're working, you know what you're able to work with, you know how much working capital you have. So I'm using this very broadly because sometimes as we're starting, we're just looking at the basics. How much cash do we have? Or if you're quite advanced, how much profit are you making? What does the next 2-3 years look like? This is what the importance of record keeping is. And also, depending on your business and how far you are into business, you might be required to take part in an audit. When I was running the microfinance, it was a requirement for us to maintain our license, for us to be audited by an audit firm. So it was crucial for us to make sure that our records were maintained, they were accurate, they were easy to understand, and that we understood them as well. It's one thing to keep the records, it's another thing to understand your records. So examples of record keeping: financial records, employee records, legal, inventory records, customer records. I'll go through those in the next slide. And some of the tools that we can use to maintain our records. We have accounting software. I know some of us don't have accounting software. I think 59% do have accounting software from the survey results. So you can use QuickBooks, you can use Xero, you can use FreshBooks. There are quite a lot of systems out there in the market that you're able to access. It's just as simple as going to Google and just checking to see what is there, and maybe just trying to do the demos to see if it's suitable for your business. So if you're a consultant, you might want to Google accounting software package for consultancy firm, just so that maybe you'll get results that are more tailored to your business. If you're into hospitality, likewise, because it might have those functions that are more useful for you if you're producing something as opposed to someone who's providing a service. Another one that I can add to that I've used before is Sage. There is Sage Online. It's also tailored to small businesses. We can record keep using spreadsheets, Microsoft Excel or Google Sheets. We can store our documents on Google Drive, Dropbox, and Evernote. And then tracking expenses is also important. So if you're actually looking to just start, I'm speaking to those who are looking to just simply start, you can just start by tracking your expenses. Just tracking your expenses. What are you spending? Sometimes as business owners, we tend not to marry certain transactions together because we don't think it's relevant for the business, or we need to keep it. If you're going to go out and use your own money to buy pens for the business, that is a business expense. Track those expenses. So there are apps like Expensify and Wave. I used Wave a lot for my dehydrated fruits business because it allowed me to be flexible with invoicing on the go. I was able to download the app. I was able to hand over the package to the customer, and within 2 minutes, I was able to send an invoice to them to their WhatsApp. So sometimes you just need to start somewhere, and something like Wave, which is free, is something that is pretty easy to use, and you'll be able to get started, at least to keep a track of your documents. And business has really evolved with the assistance of technology over the years. You find that now just taking a picture of that receipt or that invoice and just doing 10 to 15 seconds of something on the app, you are able to already have that invoice stored on the cloud, as opposed to taking it back to the office and giving it to someone to file and putting it in the filing cabinet. Technology has really allowed us to be able to store our documents online as well, which makes it flexible for you if you're always on the go or if you're not present. And then we've got CRM softwares, Salesforce, HubSpot. There are many others that will be tailored to your business. And the CRM software is customer relationship management. So we're talking about follow-up of customers. If I call your business today and I make an inquiry about the product you're selling, and you somehow get my email or my phone number from that interaction, what software are you using to ensure that you know what's happened to me after that as a customer. Did I buy the service? Did I not buy the service? Did I say, call me in 3 weeks? How do you know that information? CRM software will assist you with that information. So record keeping essentials. We're talking about financial health. Accurate records give you a clear picture of your business's financial performance. This helps you make decisions and manage your resources effectively. If you know what your finances look like at the beginning of the week, you'll be able to know if you can meet this week's demands, if you're able to meet the big order that has come through, because you have a clear picture of the business. We are also talking about tax compliance. Well-maintained records are crucial for tax compliance because it means you meet your obligations and you avoid penalties. If you use all your funds this week and you've got to pay the sales tax next week and you don't have that clear picture that you have enough resources, you might find yourself without the funds to be able to pay the taxman, and then you incur penalties. And that is always a struggle once you get into that realm. Loan applications require financial records. I'm not sure how many of you have sourced, have looked for loan applications from the bank or from microfinance institutions. They always require financial records. When we were running a microfinance, we would always ask you, what are your financial records? Even if you wanted to borrow $200 as a business, we would ask for financial records, whether they were invoices, spreadsheets, something that tells us that you knew that you're making money, or you knew what your business is operating at to be able to borrow that kind of money. External reporting is another essential, because investors will come along, or potential partners. So even at a level where a friend, a colleague, a business colleague may say, I want to invest in your business. I want to be part of your business. Having financial records is important. And also, having gone through this myself and sold businesses, it is also important to maintain those records, because you can prove to someone that your turnover was X per month, your turnover was X per year, and this is how you performed. Because if I'm going to buy your business, I need to know that you were making money. If you were not making money, I need to understand what happened for you to get to that point. Because sometimes people do buy struggling businesses because they know where they can fill the gap and where they can turn it to make it profitable. That could be the whole point of the transaction. So it is important that you do keep these records, because you don't know where you're going to be with your business at any one point, and that information is required. So examples of record keeping, we are talking about invoices. So when you've sold something, you either give somebody a cash receipt, or you give them an invoice that will allow them to prepare for the payment for your service or for your product. That is something that you can do. I know in many places, in many countries, you can simply buy a book. If you don't even have accounting software, there are invoice books that you can buy in your local stationery store or your supermarket, and you'll be able to just at least write someone's name, what the service was, or what the product was, the quantity, the unit price, and the amount. That already is record keeping. Receipts, they document all the transactions. So if you have a receipt for every payment you receive, whether it's cash, whether it's EFT or transfer, whether it's mobile money, have a receipting system, so that again, you know who has paid you and who hasn't. Sometimes with the services we offer, we tend to either allow payment terms and say, oh, it's okay, you can pay us when we deliver, you can pay us when we've done the work. If you're not tracking these transactions or providing a receipt, you could miss out on someone who actually hasn't paid you, and you've lost out on money and you've lost out on profit. Bank statements, monitor your cash flow and your account balances. Some of us are operating in countries where transactions are happening online in terms of bank transactions, and you'll be able to see very clearly what's happening. But some of you are also operating in countries where it's a cash-based economy, which means that you have to be extra vigilant in recording your cash transactions. Because if you leave the business with a certain amount of money and you come back at the end of the day without it, but you've got things in your hands, you have to write those things down. What have you bought? What was it for? And the quantities. So maintaining records is really important when it comes to cash. It's very easy to forget. And sometimes these shops will not give you a receipt. So if you don't ask for one, you're not going to get one. If you don't get one, make it a point to write it somewhere. Have a book in your office, have a spreadsheet, have something that you can write these things down. Again, we're talking about compliance, right? We're talking about even tax compliance. If the taxman wants to get a copy of an invoice from you, or they want to do an audit, or even just the audit firm wants to do an audit, that is very important for someone to be able to see the receipts. Payroll records, we're talking about recording your employee hours, your wages, withholding taxes. These are the things that we manage as part of the HR function of your businesses. As a sole trader, you may not have many employees that are particularly on your books. You might have casual workers. You might have once-off jobs that you just offer, 1 day's work or 7 days work. Maintain those records. Get those people to sign somewhere that they've received so many dollars or naira per hour or for the day for that work that they've done. Maintain those records. Maintain payroll records, like just the ID of people that you're working with. Have that information somewhere in your file. Again, we're talking about businesses that we want to grow. We want businesses that are going to make an impact in the communities we're in. And again, if someone comes through and wants to be a part of your business, if you want to sell it in the future, if you want to bring on board someone, I would want to know, if I'm a senior manager or if I'm going to be coming in to work with you, how is the business doing? How are you managing your payroll? Are you paying people? How are you paying them? Inventory records, if you manage stock, this is where you maintain your stock levels, information, and your purchase order details. Again, you need to understand if you need more stock for the next order. If you are making cakes, for example, you need to understand if you've got enough to be able to take an order for tomorrow, if that is something that you do as part of your business culture. Or for next week, you've got a wedding, you've got cupcakes to do. Do you have enough stock? You should have a system which tells you that, rather than having to go and look in the cupboard and see if there's flour in there, if there's sugar in there. You must also have your stock levels written down, because that also speaks to telling you how much money you have tied up in your stock. And then legal documents, store things like legal agreements, contracts, and especially when you get maybe tenders. Some of you might be consulting in arenas where you get tenders to supply certain things. Keep those documents available, because again, those are things that will validate some of the work that you're doing, and also for yourself to know that what you're doing is transacting in a legal manner. And customer records, this is that customer relationship management we were talking about. Contact information, payment history, basically have a database of your clients. If I was to ask you, how many clients have you served? How many clients do you have? How many are repeat clients? Is that information available? So let's talk a little bit about understanding cost pricing. So we have what are called fixed costs. So fixed costs are costs that stay the same regardless of how much you sell. So things like your rent, whether it's rent of premises, rent of office space, or a warehouse or a manufacturing warehouse, whatever space you are occupying where you need to pay rent, that is something called a fixed cost. It's not going to change because you've sold 0. It's not going to change because you've sold 10,000 units. So a fixed cost is something that is fixed and stays the same regardless of how what quantities you're doing or how many things you are providing. Things like insurance are fixed costs, and also salaries to a certain extent. So salaries, it would just be your basic salaries, for example, where you actually have employees on your books who are employed by you and employment contracts. So that would usually remain fixed, because if you've decided to pay somebody X per month for the contract of 12 months, or if they're permanent, then that usually is fixed. It doesn't normally change, but we also operate in economies particularly that have volatile exchange rates. Sometimes that may change, but your base currency should remain constant. And then the only thing that would vary salaries really is if you have casual workers that come and go per job. So that might vary it slightly, but normally there is a fixed line that comes with salaries. Can I get confirmation that we are together and that what I'm saying is clear?
Yep.
Am I audible? Okay, thank you. Thank you. Thank you. Next, we'll talk about variable costs. So variable costs will change depending on your sales volumes, like your raw materials, your utilities. So 1 month your electricity bill is $30, but next month you're going to use more than that, and it's going to be 50, for example. And your raw materials, if I use the example of the cake making, again, maybe you've got a big order like a wedding, so you have to do 500 cupcakes. So your variable costs are going to increase. Or if you are in the service industry, maybe you have to do a lot of transactions. Maybe you're providing tax services or accounting services, or you're consulting. Maybe you need to put in more hours. So sometimes your commissions on that will be variable. So that's an example of a variable cost. And then your total cost is basically the combination of the two, and that will be the cost of producing your product or delivering your service, which will include adding the two together. So with cost pricing, you need to be able to calculate your final selling price. So that final selling price will come from calculating your total cost, which will be made up of your direct materials. And when we say direct materials, we're talking about those materials that are specific to that product, your raw materials, for example, and then your labor and your overheads. And then you determine your markup. As a business owner, you should be able to sell your service or sell your product. It is important to do so, otherwise you shouldn't be in business. You need to make a profit margin. You need to make a desired return. So you need to also have an awareness and an understanding of what margin or what profit you want to make from your product or your service. If you're a non-for-profit, which I understand we have some of you amongst us, that is something different. But in terms of a business that is profit making, you have to determine your markup and understand if you're going to make a 20% markup, a 30% markup, a 5% markup. It actually just depends in terms of the type of business and the type of service that you're operating in. And then after that, you will get your total cost plus your markup, which will then make your selling price. And that is the price that you give your customer. That is the price that you then receive as payment for your service or payment for your product. So I'm just going to go through an exercise which will help us understand the calculation of a cost of a product. Now, I understand that all our businesses are different and they're unique. So this is an illustration so that you can have an example. I will show a service and I'll also show a product example, but you have to apply it to your own business and also apply your margins to give you your competitive selling price. So I'm giving the example of a cake maker. So let's look at the fixed costs that a cake maker should have. Now, this varies. There are probably more than these, but I wanted to keep it very simple so that we can actually understand how we are getting on with it. So for our fixed costs, you have your rent, you have your utilities, and you have your insurance. So I wanted to make it more applicable because I believe we have a large number of our members who are based in Nigeria. So I thought I'd make it more relevant by showing you an example in your currency. So let's look at fixed costs. We've got rent, which will be 120,000 per month. You have your utilities, that's your electricity, your water, whatever you need to make your to run the space you're working in. That'll be 60,000. Insurance 40,000. Again, like I mentioned, there are things that you can add to that, that are fixed costs that don't change whether you make product or you don't. Then you have your variable costs. You have your flour, you have your sugar, your eggs, your frosting, and your labor. So maybe what you might do is you might hire people to come in and work for you when you've got big orders, or you're just apportioning your own labor cost to say, look, if I'm making a cake, usually it's about 3,200. So those are your variable costs per cake. And then we're now looking at markup and selling price. So we look at our variable costs total, which is 6,000. We look at our desired profit margin, which is 50%. And then, 50%. And then you're saying your markup is going to be 3,000 naira. So your selling price for your cake is 9,000 naira. So how many cakes at 9,000 per cake can you cover? Do you need to cover your business's fixed expenses? So this is where the managing your finances comes in, because you need to make sure that whatever selling price you set is sufficient to be able to cover your business's fixed expenses. So remember, we had our fixed monthly expenses, which total 220,000. So if we look at our breakdown, the cake price is 9,000. The variable cost is 6,000. The profit per cake is 3,000, right? So to cover 220,000 naira of expenses, we have to sell 74 cakes a month at a profit of 3,000. Maybe your profit might change based on the type of cake. Maybe this cake is a standard vanilla cake. If it's going to be a three-tier cake, you're going to sell it for 15,000 or for 20,000, but you've used a little more ingredients, you might end up making a little more profit. But if we're looking at your basic service, looking at your basic product that makes a standard profit of 3,000, you need to make 74 cakes. I hope this is speaking to someone who is in a product service to really understand that sometimes you will see the money coming in. So for example, 74 cakes makes you 666,000 in revenue. You see that coming in the month, but some of it has to go to your expenses of 220,000. And then what is after that? That is your profit. So it's really important to keep track of your expenses so that you can see what is making profit and what isn't making profit. If you have not done this type of exercise before, I would really encourage you to go and just look at your pricing structures if you're providing a product, to make sure that you're pricing correctly and you've actually come into the market with your product at the right price. Now, some of you might be offering a premium service. So maybe your margin is 80%, or maybe your margin is actually 30% because everybody else is doing cakes at 7,000. So you really have to understand if what you are doing and the variable costs you are incurring are allowing you to be in a profitable position. Right, so now we're going to look at a service consultancy pricing example. So if you're in a service, you will have your fixed costs, which are office rent, subscriptions, marketing. You might have some licensing fees. There are other things that might come with your service industry that are fixed and that won't change. Again, this is unique to your business. And then there are variable costs like the hourly rate for support staff and the materials and sundries for your clients. Assuming 10 clients per month, the monthly costs would be total fixed costs 600,000. Total variable costs for your 10 clients will be your materials of 40,000. For example, 4 hours per client at 20,000, which makes it 80,000 per client. And then we now look at our total variable costs so that we see how much in total is variable for our service. So that will be 40,000 plus your 800,000, which is 840,000 naira. So when you add your fixed costs, Right now, it looks like 1,440,000. So now let's talk about our desired profit margin when it comes to the service. Let's assume a profit margin of 30%, which means that your profit margin is going to be 432,000. And now your total revenue needed, just like we did with the cakes, we now need to look at what we need to charge per client. So that would be 1,872,000. And then we have our markup as well. And that selling price per client for that service, whatever you service you're providing per client, will be 187,200. So if you look in the market, you can do some market research, and I think we do it with our businesses. Once you start, you always want to know, what is someone else selling this product at, or this service at? And maybe you find that in the market, the same service for the same thing that you've calculated is between 150 and 250. You can remain competitive at 190, because you know that at 190, you can cover your costs. If you want to be premium, again, that is up to you. I think as a business, you also need to place yourself strategically and understand what level you want to enter the market at. Sometimes you want to enter the market to move volumes. So maybe your selling price is going to be lower. Sometimes you want to go in and you want to be niche, you want to be premium. Then you know that if I'm offering a premium service, it really means my customers are people who want to pay the service because of whatever you've put in it to make it premium. Then you can charge a premium amount. So there's an activity that I would like us to do as individuals, whether it's within your business. And if you're not running a business yet, I know there's some people who are not running a business yet, but might want to. Maybe you can do just an example for yourself, just so that you can get an understanding of this. I would like you to do a cost pricing for your own business and for your products, and to be able to determine how many of that product or that service you will need to sell to cover your fixed expenses. So please, can I give that as an assignment? I believe Tosin will share an email address where you can send the feedback, and we can take a look at it. I can take a look at it for you and just give you some tips as well, if there's anything that you need. But I think it's important to do this. It's really important to do this because it gives you that perspective of whether you are actually costing correctly. I remember with one of my businesses, for the sake of a discount or for the sake of the job, sometimes you would just say, okay, I'll take it. I'll give you the product or the service because you want to get the client. But then I realized after some time that I actually made a loss on it because I hadn't factored in certain things, and most of them were actually fixed costs. So it's really important to assess your business and to look and see, how is your business performing? What is my cost pricing looking like? Am I on top of things or am I not on top of things? We've spoken about how some of us are in partnerships and are in companies with others. You know, you might actually be having very difficult meetings every week or every time you communicate because it seems like the business is not making money. But do you understand what's happening within the business? Is the cost pricing correct to begin with? So that you can understand if your business is making money. So please, can you either take a screenshot of this or to just remember this homework, write it down so that you can just determine how many products or how much of your services do you need to sell in a month to be able to cover your fixed expenses. Next, we're going to talk about cash flow management strategies. So the importance of cash flow is that it's required for your business sustainability. Consistent cash flow ensures you can pay your bills. We spoke about maybe meeting tax obligations. That is a cash flow item where you need to understand if you have enough cash within the business for you to be able to pay bills, to pay wages, to buy your inventory for the next order, and also to invest in growth. So whilst we can make money in our businesses and be profitable, you need to have cash to cover your regular expenses, but also to be able to invest back into the business. If we look at our cake maker might want to expand their portfolio in terms of what they provide and just not do cakes and cupcakes, but maybe they might want to go into biscuits, or they might want to go into granola bars or something like that. It's important that they then buy the equipment, buy the baking tools that they need to be able to diversify. So you need to have that extra cash within your business to be able to invest in that growth. If you have excess cash, that's what you can use it for, amongst other things. But if you're not able to make profit or understand where your money is coming from, it's very hard to be able to build in that scenario. Cash flow management strategies. Another strategy is preventing cash flow problems. So this is linked to the point I've just mentioned. You want to be able to avoid financial strain or just running at a loss by not managing your cash appropriately. So what I have found, some of the things that I have found in terms of managing cash in particular, is to have reconciliations every day about the cash that is within the business, including the bank accounts, including the credit cards, including physical cash on the premises. So find a way that you can record that information. What did you start the day with? What did you spend today? And what did you end the day with? Depending on your business models and the size of your businesses, if you have a team or if you have someone who can do that reconciliation for you and just have it available, that is great. You can either share it as a team if the team members are allowed to have sight of that information, or it can just be something that is available to those who need to see it. But to be able to just check that we understand how the bank balance moved by 4,000 yesterday or by 10,000 yesterday. Because the thing is, when you get to the end of the month and you suddenly wonder where 200,000 naira went to, you want to be able to track and to understand step by step that, oh, it was on this day, on that day, and the other day. I have a very simple method for doing that. I have a spreadsheet where I have days of the month, like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, right up to the 31st. And basically, I have a starting balance, and then I detail what expenses went through the day and what money came in the day, and then what the total balance is. And then there's a cash count that gets done and a check of the balance sheet, of the bank statement. And that just allows us to check if everything is in order. Do we understand what the money in the bank is for and how much it is? That will also help you prepare and not find yourself with cash flow problems, because maybe on that same spreadsheet, you can put somewhere at the bottom that you want to remind yourself that there's an obligation for sales tax on the 25th of the month. There's an obligation for employee taxes on the 10th or on the 15th, depending on the dates of your tax authority. And also, if there's anything significant, we're moving into December. Maybe some of you pay bonuses, in which case I'd like to work for you. And you need to prepare for that, to say, okay, I would like to pay my staff members an extra 50% for December. So those are the things that you would put on that spreadsheet, just so that you have an awareness and you know that you are prioritizing certain amounts of money within the money that you have. So managing your cash flow is probably the first thing you also need to do as you start your business when you're record keeping, because that's the thing that drives the business. So make sure you understand where your money is. Is it in stock? Is it in the bank? Is it in cash? And then understand what obligations you have for that cash to make sure you have money at the end of the day, at the end of the month, at the end of the year. And this is how you grow. Invoice promptly. So again, we have to make sure that when we transact with our customers, we send our invoices, we send our receipts. Depending on your business, depending on your service, you might be providing this item before they pay. Make sure they pay. Follow them up to make sure they're not overdue, because they're going to affect your ability to meet your other requirements. So for example, if you need to do a big order and it's just before salaries date, you need to make sure that either you have the money already in your bank account and the timing of this big order will not tip the scale for you, or you need to make sure that you invoice on time and get the money on time so that you don't have cash flow problems. And then negotiate payment terms if you need to and if you can. Some suppliers do offer payment terms. This is another way to manage your cash flow so that you don't have big outgoings at the same time. You can get payment terms where you can pay maybe within 30 days, and you know you will have done some work or some orders within that time to be able to pay the bill, or over 3 months. It really depends on your business. Maybe think about it and see where you can try and get some payment terms that are favorable. I would say that with this option, it requires you to be very disciplined, because sometimes you'll see the excess money in your cash and you'll think you have cash, but if you don't write down somewhere that part of that cash has to meet a quarterly payment or half a payment for a supplier you've negotiated terms with, again, you'll find yourself in cash flow problems, because at some point you might then miss the payment and then you still owe the full amount, but now you do not have the cash. So with number 4, I would really encourage you to do this if you are disciplined and if you are going to maintain your records to be able to know when the payments are due, what is due, and how you're going to pay it. Because maybe sometimes your suppliers will only want cash, or they'll only want transfer. So make sure you've got the right amounts of money in the right places. Right, so we've come to the end of our session. This was the first part of our financial management sessions. And in the next part, we're going to discuss income statements, balance sheet, which form your accounting basics. So I'll be going a little bit deeper into those topics, because I also don't want this to be too heavy. You also want to be able to do things in stages. So in our next part, we will talk about accounting basics, and we will talk about managing debt. I know some of the questions that came through were about finding funding and grants and things like that. We will be talking about those things. I have had experience in getting funding, and what I went through with the business after getting funding and realizing that, is it profitable? Is it not profitable? That's something that I'll speak to next time we meet. So I would really encourage you to join again next time. And one of the things I would like you to remember is that successful financial management is a continuous journey. Be sure to review your finances regularly and adjust them as needed. So some of these tools that I've given you are standard tools, but sometimes you need to adjust your finances to meet demand, or to be able to just survive and break even. So always review how your finances are, how you're managing cash and money, and adjust as needed. It's not a bad thing. It's really good for your business to be able to know where you are and what you need to do to keep your business afloat, to make your business profitable and to grow. And remember that it's an ongoing process. One of the things that I love about being a Christian and being in business is that I always have that faith that things are going to go according to God's plan and how He has intended that thing to go. So it's an ongoing process. There will be times when business is not going well. It's nice to get these tools, but sometimes business is not going well. Business is hard. Business is not easy to operate because of the environment you're in, or because of a mistake someone's made. It could be various things, but it's an ongoing process, and there's always an opportunity to start now, to change, and to try and improve. So I'd really encourage you to remember those things as you're running your businesses. And I always think to myself, if someone was just to come and say, can I just see what you're doing? How are you making your money? What are you doing with your business? I should be somewhat ready to speak about it and then to show them, so that they understand that you're running your business and you're running an effective and fully operational business. So from my end, I'd like to thank you And I really hope that you found this valuable. And my details are on the screen if you can see them. If you'd like to email me, you may go ahead. If I would love to connect with anyone on LinkedIn. And my social media handles are on the link provided if you'd like to follow me on Instagram and Facebook and TikTok. And I'll hand this time back to Tosin.